Today I want to teach you a breakout strategy that will be simple yet effective and that you can learn in about 10 minutes. We'll go straight to it and let's just dive right in. Alright, so this is a strategy I use myself in the Forex market. I've been using it for, I believe, like 4 years now, maybe more. Actually more than that, probably 5 years now. So I'll show you the rules and theory first, and then we'll go on the charts, and you can learn the whole strategy for yourself. You can use it if you want. I recommend you backtest it a little bit first to understand the stats behind it, and really practice it more. But the rules will all be here for you. We don't have much time, only 10 minutes. So let's just go for it. Alright, so the strategy I'll teach you today is the breakout RSI. It's something I've been using myself for several years now, and I want to cover the basics. So let's begin with time frames. Now you can use this on any time frame you want. I personally myself use this on the 1 hour chart, also sometimes the 15 minutes if I have time and I'm there at the chart or something happens. But this works on pretty much all time frames, and I'll show you why. Now what you want to do is you want to pick a range in the market. It has to be somewhat clear. So similar highs, similar lows in the market. You don't want any kind of like trend lines, you don't want any kind of like different highs, different lows. It should be all about the same to have a clear range. If it's not clear, then that's not going to work well with the strategy over here. So what you want to have is a range in the market. Then you want to look for price being within the range. So somewhat within the range. It could be not exactly the same high, not the same low exactly, but somewhat within. And then we'll look for a breakout of that range. So to the upside, or it could be also to the downside. Now, it's a very simple strategy, very simple. The only rules we have is we need to have the RSI confluence, and the RSI is not the way most people use it. That's the thing with this strategy here. It's going to be different from how most people use it. When you have a breakout, so to the upside here, we'll look at the RSI being overbought, so within the trend. So you might think, well, if it's overbought, we should sell, but it's actually the opposite. It works better if it's overbought and you buy. To the opposite, when it's here, we have a breakdown. We want the RSI to be oversold. Again, I know what you're thinking already is the fact that people told you for years to use the RSI. When it's oversold, you buy, but it's actually the opposite. Okay, we'll do it the opposite way, and it works a lot better. You'll see why. So we use the RSI here as not a reversal, but as a trend indicator. Or we could say as a momentum indicator in that case. Now, how does the entry work? It's very, very simple. Okay, you would enter when you have a breakout. So let's say you have a candlestick over here. That's the breakout candlestick. Okay, so it's a bullish candlestick. And before that, let's say we had another bullish candlestick. And this will be the range. This one breaks out the range. We're going to enter here right above the high. And we put a stop loss either below the candlestick that broke out the range, this one over here, or we can put a stop loss beyond the most recent pullback. So it could be over here, depending on how the candlesticks work. So we'll look at the first pullback before the breakout, or right below the low of the candlestick that broke out. It's your preference. First way, you'll be stepped out more often, of course. Second way, you'll be stepped out a lot less often, but you have a much smaller reward. So you pick your choice. Both ways work. I've tested both myself in the past. You use the one you want. So that's all. Those are the simple rules for this strategy. I'll show you 2 examples here on the chart, and let's just go right away. All right, first example here on GBP/USD. You'll see we are in a sort of a range here. It's not the perfect textbook example, so I want to show you this because it's like a little bit more tricky to trade that, but it works quite well. Okay, so let's see how we would do this. We have our price going over here. We have this range in the market. I'm just going to draw here the range with this tool that kind of has a high over here. Okay, that's pretty much our high. We'll include the wick over here. Boom over here. There we go. And then we kind of go, we have a low that's over here, and we could do this, of course, but we kind of have a lower low here because of these wicks in the past over here. So the range kind of like started here in the past. If you draw your range over here, that's fine too. Okay, that will give you a reversal here. And then we kind of have to kind of have a breakout here, but that's not so clear. So we're gonna have some false breakout, that's for sure. But let's say we draw a range that way. Okay. Now what we want to have is we want to have price breaking out this range. By the way, this is a 1 hour chart. So you'll see this works on multiple time frames. I'll show you a forward chart breakout later, and you'll see the difference here. So let's just kind of see how price goes with this. Okay, we'll move forward here. All right, forward more. Let's go. We are back within the range. We stay within the range. And you see price kind of like doing a range within a range. We have this new here limit. I'm just going to draw this over here. We can have this new range, but we're not going to trade that. Okay, this is only within the bigger range. We want to look at a range that's clear. This is just within. Okay, let's move forward more. Okay, let's continue that, see how it's going. Oh, see here we have a break. Now let's see how this turns out. Okay, oh, pretty big break here, so that's good. So see how we have a clear break of the range. Here in the past, this one wasn't a very clear break. We just had a wick outside. We came back within right away. This here is our clear break of the range. Okay, so we have actually this candlestick kind of broke out. Let's see how this breaks. Okay, this is our here low of the range, 1.244, and we kind of have this one breaking out, but it's not very clear, so we wouldn't trade that. We are waiting for this one here to break. Now this is what I call a clear break of the range. Now our rule is very simple. We need to have a break of the range with a candlestick. We have to have a close beyond the range, and then we need to have a RSI break. So here we have the RSI being oversold. Again, what most people would say is, oh, you want to buy when it's oversold, price will go back up. It doesn't work that way in practice. Okay, that's just not working. I've tested this in the past. Trade with the RSI doesn't work. I trade the opposite way of most people, which is when it's overbought, you want to sell. In this example here, we have a breakout. So this is a good sign of good momentum in our favor to sell. So what we'll do is very simple. Okay, like I said, we'll place our order just a little bit beyond the high. So we would place this somewhere over here, sell right here. Then our stop loss, we have two options. Option number one will be over here, beyond this candlestick here that broke out. Or if you want to be very careful, we have the first pullback, which could be over here, or even over here if you want. Okay, this is extreme. This will be a lot of safety in this market. I wouldn't do that. I would maybe do it over here, this first pullback. That's a little bit less clear, but still works. Or my preferred way for myself is over here, the candlestick that broke out of the range, beyond the high. Okay, so that gives us a pretty good stop loss still in this market. So what we'll do is we'll go here and we'll do short position. So we'll enter over here, stop loss right over here. And then how do we take profit in this? Well, we have a few options, which I didn't share with you before. You can do a trailing profit if you want. Or the other way that works really well is you want to take this range here and add this below. So we will go and take this, we'll copy it, and we'll put this below here, and that will be your target. Okay, this is what you see in textbook a lot on breakouts. That's what a target looks like for breakout trades. It's the same range added to the opposite side, okay, of the range. So here we can drag this here. Let me just make sure this is good. Okay, see, that gives us a 2 to 1 reward to risk roughly. Now if you want to do this plus more after, like this and a trailing stop, you can do that too. I'm showing you here the entry and the trigger for that strategy, but then it's up to you to decide how you take profits on this. So let's see how this works. Okay, we enter our trade over here on this candlestick when it's going to open, a little bit below the candlestick, and then we have this 2 to 1 here on this trade. Okay, of course you can do more. I might do like a 2 to 1 and then a 3 to 1 if I want to be safe. So half the profit at 2 to 1, the other half at 3 to 1. Actually, let's just do that. Okay, let's see how this works. I have no clue what this market will do here, but that is our 2 to 1, or actually the range here that we had in the past. And let's just do our 3 to 1 for our second take profit. You can catch a bit more of this move. It will give us a 2.5 to 1. Let's just do this. That's what it would look like at 2 to 1, or actually 2.14 to 1, which is the range, then 3 to 1. So let's see how this goes out. Okay, so here our entry is triggered on the next candlestick. We are on the trade. We're going down. This works really well, actually. It's a pretty good trade. Okay, small pullback here. Don't be scared. That's fine. You don't want to close your trade here when it's pulling back. That's a bad strategy. You want to wait for price to go in your favor more. Okay, oh, getting stagnant here, not moving that much. Here we go, we're going back in the trade. Okay, our first, there we go, our first trigger here is done. So we reach our target for the range width over here. So whatever we had over here, we copy it below, and we have our first target. We reached that quite easily. Let's just keep moving forward. And boom, okay, we reached our second target here. So pretty good trade. Now price ended up going way more in our favor that way, but you want to have a clear target, and that would be not so clear in that case. So I'll just show you here how price went. See, it's going down more, it's going down more, it's keeping going. This will be a nice pullback strategy here, but not a breakout one. So we could re-enter here on a pullback if you want. But price here just keeps going and going and going. But actually we pull back quite a lot here. So we had a pretty good exit in that market. This is my reversal strategy here, picking up. I would enter here on a reversal, but this is pretty good. Okay, pretty good. Gonna stop, pause that, and actually we have a pretty good exit here. Even though we could go all the way to here, it's still pretty good. We're still getting a good exit out of the trade because the fact that price pulled back and we want to have a place to get out. That's logical, based on not just thinking and emotions, based on logic, and that's a very good one over here. Alright, that was a good trade. Okay, let's do an example here on, actually, let's do EuroCAD. This is a pair that's very much ranging. I'll take an example that's a bit more recent here on this pair. And you'll see this is only a couple of days ago. So here we have the range. I'm just going back in time for you to see how that works out. We have a much clearer range here than on the previous pair on GBP USD. This is like very clear. If you cannot spot this range, we have an issue to work on. So I'm just gonna roughly, okay, over here, and draw this down. Okay, this is approximate. It's never gonna be perfect, but we have a pretty good example here of our range. Okay, like this. All right. So we have our highs here that are all the same. This one goes a little bit beyond, but we only have a wick. So we're not going to trade this breakout, of course. That would be a bad breakout. We want to have a close beyond the range. So now let's just keep moving forward. Price is at the bottom here. I might do a breakout to the downside. We don't know yet. Let's move this forward. Okay, so we are still at the downside. Might break out here. Looks like no, we're going back up. Going back up. Okay, at the top of the range. Alright, we're still within the range. Okay, now we're going back to here, the downside, where we are maybe gonna break down. I'm not sure yet. Okay, we're playing around here. That's a, yeah, we're not doing much. We might want to bring this over here more recently. And now we have a clear breakout. Clear. This is like very clear outside the range. You can see like the range here has always been within these parameters here. The low was always 1.338 or so. Now we're going way more down here at 1.332. Okay, that's a big breakout. So as the rules say, very simple, look at the RSI. Is the RSI overbought or oversold, or is it within the limit? If it's within the limit, we don't want to trade here. We want to wait for the RSI to be oversold for a sell trade. So what we'll do is we have a nice trade here. We would place our entry below the low. Okay, you see the RSI here is oversold on this candlestick, 26. 30 is the limit. That's good. That's lower. And then our stop loss would be either here beyond the high, my favorite way, or the most recent pullback. Could be this one. Could be this one, but that's like pushing it a little bit too far. Okay, so either this one or this one. In my preference. Now you could be different. That's up to you, of course. You decide what you want to trade. That's how we go about it. Next step is placing our thing over here. I'm not show you how that works. Short again. Boom. Stop loss over here. Now again, our take profit. Like we said before, same principle. Maybe I'll lower the RSI a little bit more so you can see better. And we want to be able to take the range, add it below. That would be our target. Add this over here. So in this case, our target would be, okay, 2.5 to 1. That's pretty good target in this case. Now this trade, you won't see it unfold very much because it's a recent trade. So if I just go back in time and forward it to now, okay, you'll see price is entering the trade. We're pulling back a little bit within the range here. Actually just doing a quick pullback, which is normal, it's expected. But we are in our trade here right now. Okay, so that's a pretty good trade. We can just take this breakout and it works out pretty fine. Now I wanted to finish the video here, but I want to show a last example on a lower time frame, 15-minute chart, so you can see. And this one is a bit more tricky. You'll see why. Okay, it's quite surprising. So we have this nice range on USD/JPY. Japanese yen pair tends to consolidate a lot. Okay, it's quite boring sometimes to trade these pairs, but you'll see how we can use this strategy for breakouts, the breakout RSI, to trade that kind of stuff. Okay, so we have a range that's not so clear. It could be better, but it's still pretty clear. See how we have our high here, then we're going back over here, and then we kind of have this low here. And you see in just a minute that this low here is repeating itself. Okay, so we'll just move forward a little bit. So we kind of have a low here that's repeating itself. Not so clear, like actually we have over here in the past. So we have this low, and then this low is not so clear, but still within the range. But you see we have the same high, so that's pretty good. Now on this pair, the Japanese yen, we usually have a lot of fake out, so false breakout that go well, but then that break out nicely, but then end up going back within the range. So we want to be very careful of that. If you move forward here, we have a wick. That's a false breakout. We don't want to enter that. But then it comes to a nice engulfing candle. That is very good. Except for RSI here is not so much outside the limit, the 70 limit. It's not overbought yet. So we don't want to enter that trade. Okay, it's close to it, but we're not there yet. So in this case, I will not enter this particular trade. I would wait. It will probably be a false breakout. The price comes back within the range, and okay, price makes a nice wick. Now this one, you'll see it's candle breaking outside the range. We're just 1 or 2 candle later. I will still take this trade because the fact that we are still at the range, okay, this could be just like a big candlestick breaking out, especially on a 1 hour chart. This would be a big candlestick breaking out. We could trade that because now we are overbought on the RSI. That's in our favor. So in this particular trade, we would put our entry here above the high. Stop loss, we have 2 choices. Let me just highlight this for you. Entry above the high, stop loss below the low over here, or other option is nice recent pullback, which is over here. So that is giving us quite a few options. Now I would be looking at for my target, like we said before, take that one, double it above. So this will be over here. Okay, so we are having a decent trade, like maybe like a 1-to-1 here, maybe a little bit more. You might want to skip it if you want. It's up to you, of course. If you use multiple take profit, then that would be different, but it might be a so long. We enter here, put our stop loss here, quite aggressive, but still fine. Okay, so we have a 1, we have a bit more than 1. Okay, 1.08. With this strategy, you have usually a pretty good win rate. So you might have a 60% win rate in my testing, of course. So you might want to take the 1-to-1 and just skip it, up to you. So let's see how this plays out. Okay, boom, we are triggered here. Oh, we come back within a little bit. Okay, we're back, that's good. Okay, so we are, see how it's pretty slow to move up. Pretty slow. Okay, we're going back up, that's good. We have our first here pullback, which is good. After the breakout. Okay, boom, so this is triggered. Perfect. We are out of the trade. Depending if you use like what kind of take profit. Let's just see if we can go to 2-to-1 in this case. I'm gonna do in this case a 1-to-1 and a 2-to-1 because we're very close to, we have a small reward to risk in this case. Okay, we cancel it again. That will be another breakout we can trade for sure. Okay, nice range. Seems like we cannot really go beyond 1-to-1 that much. And then we are getting out of the market, going away, doing something else. And the strategy works quite well in this kind of market. But you want to be able to confirm with the RSI to get a good probability trade in that case. Alright, so hope you like the video, hope you like the strategy here in this video. I went a little bit beyond the time I wanted to cover in this video, but let me know your thoughts in the comment section. As always, I want to hear what you think. Will you use the strategy or not? Is this something you want to use in the market? Let me know in the comment section below, as always. Subscribe if it's not done yet. I publish videos like this 3 to 4 times a week, 1 interview every week, 2 videos to teach you things about trading, some tips, strategies, and tricks you can use in the market, and 1 interview every week with a trader I admire, and someone you can learn trading from, and get his best tips on this interview. So subscribe if it's not done yet, and I'll catch you back here in the next video pretty soon. Ciao.